Hi there, and welcome. Patrick Prunty here, Director of Private Lending with Marshall Reddick and Principal Manager in the Marshall Reddick Mortgage Fund. Thank you so much for joining me. It's always my pleasure to be here, and thank you for your time. In this session, while keeping it super simple, I'll introduce you to the mortgage fund and also help you understand why it's optimal for your investment portfolio. So the word of the day or the session is optimize. And when I thought about that word, I had to look to the definition. And so everyone's clear, the definition is to make as perfect, effective, or functional as possible. And then when taking that and applying it in this context, it's really Marshall Reddick Mortgage Fund can help make your overall investment portfolio as perfect, effective, and as functional as possible, which is really what we're all looking for. We're all trying to earn the best possible return, the safest possible return, the most effective, the most functional return as possible. And I think that you'll agree with me after tuning in this session that the Marshall Reddick Mortgage Fund is really an effective tool to help you do so. So why exactly? That's a good question. So from my perspective, and I think you'll agree, Marshall Reddick Mortgage Fund is a great place to park investment capital. Okay, it's similar to a bank CD in many cases. It's a very conservative investment and it's non-volatile, non-correlated. It's not going to be up and down like the stock market. It just doesn't contain that type of volatility. It's a very safe investment. On the other hand, opposite of a bank CD, it pays a much better return. Currently, we're annualizing at 9%. Also, it's ideal for self-directed retirement accounts or the aggregation of capital in between major investments. So from a self-directed retirement account perspective, so many folks come to me and say, I have a hard time keeping my self-directed retirement funds invested on a regular basis, right? The structure of the fund offers the opportunity to stay invested at all times, which is something that a self-directed IRA oftentimes lacks. Additionally, when we're talking about the aggregation of capital in between major investments, that's different for everybody. But when I think about a major investment, I think about the purchase of the next rental property or something along those lines, right? And right now might not be the best time, in your opinion, to be buying the next rental property. So in the meantime, while you're waiting or while you're saving for it, it's not a bad place to stick and park that investment capital. Again, much better than a bank CD and especially better than a money market account where the bank's really paying you nothing in exchange for holding your capital. So that's the optimization aspect of it. And as I leave that, I just would like to state that, from my professional opinion, I think there's a really strong argument that an investment in Marshall Reddick Mortgage Fund equal to, say, 15% of one's net worth really rounds out a well-diversified portfolio. Now, in terms of what it actually is, right, the technical language first. It's a Reg D 506C, general solicitation. It can be advertised, but it is a private placement, right? It's a fancy word for an investment fund. It's organized as a partnership, right? And it's out of California. So it is a California limited liability company. As I said, it's an investment fund at its basis. It's managed by Marshall Reddick. Marshall Reddick raises the capital invested by the mortgage fund by issuing restricted securities. And in return for those restricted securities, it pays a solid, consistent, and most importantly, safe return on investment on a quarterly basis. Now, when I say restricted, I want to point out that that simply means that there's not a readily saleable market, right? You cannot sell your securities to another investor. This is not something that's publicly traded. It's a private investment fund. It's perpetual. It has no defined capital raise period and no defined end date. And because of this open-ended operational nature, it offers flexibility and liquidity, something that all investors look for. And specifically with flexibility and liquidity, you have the ability, due to the open-ended operational nature, to add additional capital as time goes on, or perhaps to withdraw capital when needed, perhaps for that next big portfolio investment that you're saving for. Another thing that's important to note is the ability to reinvest or take the distributions. Again, I'm going to point back to the self-directed retirement account status. A major problem there, right? Where investments with your self-directed retirement account are great, but what do you do with the dividends or the mortgage payments or the returns? Oftentimes those aggregate in your custodial account and you don't have the ability to earn returns on those small amounts you're collecting either monthly or quarterly or annually. So again, perfect place to stick dollars, especially if you're looking to reinvest as opposed to automatically taking those distributions, much like a stock, bond, or mutual fund. And there's few restrictions. There are some restrictions, but there are very few, again, offering flexibility and liquidity. Now, one of the most frequently asked questions that I get is with regard to getting your funds out, and I'll answer that directly. In a regular operating market, you should expect 90 days. So when you call for your capital, again, expect 90 days in which the mortgage fund to be able to return that capital. Now, it is important also to understand that this 506C is open to accredited investors only. Now, the definition of an accredited investor is not a Marshall Reddick definition. This is a government definition. And they're either looking for high incomes or substantial net worth. From an income standpoint, we're talking about an individual with annual income of $200,000 or greater. If you'd like to include a spouse or you'll be co-investing with a spouse, that annual income requirement is $300,000. That would be in each of the most two recent years with the same expectation of reaching that income in the same year. So we would look to your 2019 and 2020 annual incomes to pass as an accredited investor when qualifying via income. Separately, if that's not an option for you, but you have assets, we can look to qualify you in the net worth capability, right? And in this capacity, it's a net worth greater than 1 million. Now, that doesn't mean you just simply show assets north of 1 million. That's a full net worth analysis, which is simply the adding up of all of your assets, the subtracting all of your assets, all of your liabilities or all of your debts, and then at the bottom of that balance sheet or net worth analysis, having assets in excess of debts or liabilities of 1 million. And it's important to note that any equity in one's primary residence is off the table in an individual net worth calculation. You can read up more about this on Investopedia.com and many other online resources if you'd like to gather more information. There are variations for corporate investors or for banks or insurance companies and endowments of things of that nature, but most of the folks investing in Marshall Reddick Mortgage Fund are Marshall Reddick clients just like you, qualifying either via income or net worth. Now, the verification of accredited investor, right? What do we actually have to see? Because we don't just say, yeah, I'm accredited and you're good to go. It's not a lot harder than that, but there is some onus or responsibility for us as fund managers and the promoter of the fund to actually verify that you qualify as an accredited investor. Specifically, we offer this in 3 ways. So first and foremost is to get a trusted third-party professional, someone whom you're comfortable with, someone whom knows your financial position extremely well, intimate knowledge of your financial position. That would either have to be your CPA, perhaps an attorney, or a registered financial advisor. And we have a template letter that you can use, but also one of these advisors, these third parties, could use their own letterhead and write in a letter to the effect to vouch for you qualifying as an accredited investor. If you don't have one of those third parties intimately knowledgeable in your financials that you can look to, then you can opt for a third-party online service. And verifyinvestor.com is one of those services that I use personally and I recommend to my clients. I've gone through the process on verifyinvestor.com. It's very simple, right? It does require you to do some homework, and you do have to show them a credit report, and you do have to show them assets and liabilities, but it's all online, it's all anonymous, and it can all be done very quickly. And they get back to you with a ruling on the accreditation very quickly, oftentimes within 24 hours. They simply have attorneys that work on staff that produce a letter similar to what we would be requesting in option 1 here. Now, alternatively, third option would be internal verification directly with Marshall Reddick. And note, however, that this is only available for those qualifying via income. And the reason for that is that it's fairly easy to see from an income standpoint that you qualify or not. And you can easily do so by showing your W-2s or 1099s, K-1s, or your 1040, or any combination thereof that clearly identifies that you meet the income requirements we previously discussed. Unfortunately, net worth requirements are ambiguous, have a little bit more detail orientation, and we are not currently internally verifying Marshall Reddick clients as accredited via net worth. In that situation, you'd have to opt for the third-party professional or the online resource. Now, with regard to the details or conducting due diligence or transparency on the mortgage fund, we're going to look to the website, and we specifically set up a site to answer all of those questions, to provide you the details, to allow you ease of due diligence and full transparency on what it is that Marshall Reddick Mortgage Fund does, what it holds, what the returns are. And so with that said, I'm going to actually opt to bring on the website and kind of take a tour through it with you. I've got the URL there at the bottom, and this is actually the site. Okay, and if you start at the home page, you would simply hover over Invest and click on Investment Fund, and this is where you would arrive, excuse me. Now, notice the tooltips, right? All of these questions are all tooltips that sort of define the different metrics that you're going to find on this fully transparent look at the mortgage fund, okay? Now, and notice here, most of the data points on this site are updated in real time. There's only 2 that are not, and those 2 would be the annualized return and the total investor capital, right? These both fluctuate, and we publish these at each quarter end. Okay, so our annualized return north of 9.6, this is a since inception return and was updated as recently as October 1st, which was the first day of the 4th quarter. Same goes for the total investor capital. So this number is obviously higher than that now. We're north of 25 million, and that's across approximately 150 individual Marshall Reddick capital partners just like you. Now, the other metrics, as I mentioned on here, are updated in real time. And an example of that is our active mortgage investments. This is certainly not the number of mortgages the fund in its history has funded or purchased, right? But this is just the active portfolio. This is the number of loans currently in play that are currently earning interest and loan fees, right? And so just simple math, right? About 25 million over 150 investments were 165,000 or so average, right? So we do have many mortgages under that average. We have many over that average, but just to kind of give you a feel about what's happening here. Moving on to the next tranche, if you will, of this site, I'm going to dive into fund information, which also includes the fund managers. Okay, so under fund information, there is summaries, if you will, with regard to structure, purpose, and strategy, right? Read those on your own time, conduct a little more due diligence, but do note in the documents tab, right? This is where the full operational documents are going to be listed. So for those of you who are heavy readers and like to get into the nitty gritty, I encourage you to go ahead and click to download the full private placement memorandum, very similar to the prospectus for a publicly traded company. It's filled with legalese, but it's actually written very clearly and concisely and is going to walk you through all of those different nuances and operational features of the fund. Same with the operating agreement. Every limited liability company carries an operating agreement and sort of further outlines. This would be a more concise version of the private placement and something that you as a capital partner, should you choose to invest in the mortgage fund, will be agreeing to. We also have the subscription agreement. This is the document that we will sign, you as the investor and me as the principal manager will sign before we will accept your investment into the mortgage fund. And then finally, the document section is the accredited investor letter. And I talk about that on the prior slide, where if you are going to opt for a third party who's going to vouch for you as an accredited investor, our template letter is right here for download. So you can either send your CPA, attorney, or financial advisor here to have them download it, fill it out, email it back to you, or you can download it, email to them, and trade it back to us so that we can verify that you are indeed an accredited investor. As far as the fund managers, there's 3 principal managers, myself and my 2 colleagues, Ross Nelson and Scott Pastel. And then, of course, there's the underlying private lending staff that's employed by Marshall Reddick, the manager of the mortgage fund. We all operate out of the Newport Beach office here in California and are extremely proud of what we've been able to build and of the returns that we're able to produce. Moving along, one of my favorite sections of this site is going to be the exploring of the mortgages in the fund. And this really promotes the transparency that I mentioned, where we, in essence, right, I talked about there was 150 mortgages. Well, here we go, right? And you can actually find an individual listing page for each mortgage so that you can dive in to see, loan to values and interest rates and photos of the subject property and so on. You can also sort these very easily. For example, I'm sorted by loan amount here, but if I wanted to sort by, let's say, loan term, right, I could. And I can see my longer term loans versus my shorter term loans. And the mortgage fund is an aggregation of lots of different loans, some 30-year fixed terms, a lot of 12-month terms, and so on. But it's a very diversified portfolio. Now, moving further along in terms of exploring the mortgages, this is my absolute favorite part, and it's this spatial map that you can see, right? And this really, really goes to show, really how diversified we are, with no more than 20% of any state holding the mortgages in the portfolio. So our biggest exposure there is Florida at 31 over 150 mortgages, so roughly 20%. And you can just see the states that we like to operate, right? And we only operate in markets where we have a footprint, right? Where we have our own Marshall Reddick office, or we know plenty of brokers and property managers and contractors and people, should something go sideways, should we have a default, that we can take action with regard to that one specific mortgage where there may be a situation arise in that matter. And as a debt fund, we certainly will have defaults. That's just part of the business. It's not something to be scared of. It just means that we have to take action. And we at Marshall Reddick, certainly with the experience and the longevity of lengthy careers, have the professional knowledge and expertise to be able to navigate situations as such. I also will point out that some cool features here. If you actually click on the state and the number, it's actually going to give you, again, those listings to where you could then click. I'll show you this one, for example. I opened in a new browser, and there's this property in Austin, Texas that we have an outstanding loan against. And this would be that mortgage listing. So for those who are really detail oriented and really want to understand the overall risks in the portfolio, we're in real time showing you what mortgages the fund has, what the loan to values are, the interest rates, and so on and so forth. As we progress downwards, we've just got some other metrics here, and some of these I really enjoy. Okay, so I'll start with active borrowers, and again, just another play on the diversification that's here. So we have 150 active mortgages earning interest right this second, and that's across 91 borrowers. Okay, so again, the diversification there, where our exposure per borrower is extremely low. Loan to value here on the right sort of speaks for itself, right? So an aggregate roll up, if you will, loan to value under 65%, I sleep extremely well at night. And it's important to know, that the cumulative collateral property value on these 150 loans is 35% more than the dollars actually lent. That's what that metric means. So the overall value of the property we're lending dollars against is significantly larger, more borrower skin in the game, than the actual dollars lent, right? So always keep an eye on this number. Again, it updates in real time as new mortgages are funded or prior mortgages originated are paid off. A few others that I'll mention before we move on would be property type. I absolutely love single family homes, right? Not only as a rental property investor myself, but as a lender. And the reason for that is that the single family home is the most easily tradable, most liquid property type. And at 131 single family homes as collateral assets for that 150 loans, we're talking about nearly 90% of the portfolio being secured by the single family home. Again, something me as a principal manager that really makes me feel good about the overall health of this portfolio. And these are not just random by chance metrics. These are all planned and set out and a part of the overall business plan and the ability for us to continue to manage this over the long haul. Because remember, this fund is open-ended. It's going to operate in perpetuity. Okay, so moving along from there into the next tranche, if you will, I'm going to move down into historical performance. And this sort of speaks for itself again. We are simply going to produce at quarter end the total amount of capital, right, on hand, the total number of investors that capital makes up, as well as the distribution amount and the percentage return per quarter. Okay, and that's just something that we decided early on when we made the venture into this mortgage fund, is that it just needs to be completely open, honest. You like what we're doing and you want to invest with us, or you don't. And if it's not the right investment for you, we get it. But we feel like what we bring to the table and this business plan is something, again, that's optimal for your investment portfolio. Now take note of this invest now button. I'm going to come back to that. That's going to be really our principal or actionable item for those of you who like what you hear and are looking forward to striking up a conversation and taking the next step towards an investment in the fund. Now, last tranche that I'm going to discuss in this session is this fund details. So this is sort of the nuts and the bolts, if you will. Okay, so as far as the waterfall goes and the investor requirements, start over here. We mentioned that accredited investors only. We haven't yet mentioned, but indeed there is a minimum investment, which is $25,000, right? So a very easy barrier of entry and a great place to start the aggregation of capital in between large investments. The liquidity, we spoke a bit about that, but you only have a 12-month minimum investment period or a 12-month lockup. Right? So again, very similar to a bank CD, except it pays substantially better. We mentioned several times the quarterly distributions, and I'll segue that over then into the waterfall there on the left. So the bottom line is that there is indeed an asset management fee, right? The staff, the private lending staff, the principals, and so on, they're not employees of the mortgage fund, they're employees of Marshall Reddick. And so the asset management fee, a very standard management fee to private investment funds like this, is not a profit center. And instead, this asset management fee simply covers the overhead for Marshall Reddick to run or manage the operations of the mortgage fund. After, of course, the expenses inclusive of the asset management fee, the first to be paid are you, the investor, right? And that's in the form of a 6% preferred return. After the 6% preferred return, that's an annual number. Again, so if we're breaking that down quarterly, we're talking about 1.5% per quarter times 4 quarters, that's your 6. After the 6%, and only thereafter, will Marshall Reddick participate in profits. And so the remaining capital, right, after the preferred return is split 50-50. Now, I'm going to, once we're finished here, give you an example breakdown using real numbers that are occurring right now to help you better understand those percentages and what they're based on. Before I do so, I do want to point out again the ability to automatically reinvest the distributions, much like a stock or a mutual fund. We also do have some frequently asked questions here at the bottom. And one of those I get often is, what's the expectation? What's the target return for the fund? Right, well, the target return over a long period of time, and by long, we always look at that as at least a 15-year period. The number here is 8%. So that's after giving time for ups and downs, working through some recessionary periods and so on. But again, this is not a volatile investment. This is not something like the stock market that's going to have the super highs and the super lows. This is a very consistent, very steady debt fund that collects interest and loan fees. And we're able to earn that 8% return north of or inclusive of the asset management fee by sharing in not only the interest paid, but the loan fees charged at loan origination. So that will conclude our tour of the mortgage fund site that we've set up to allow you to do your due diligence, to let you learn more about the details and sort of dive into the transparency. So as I move back here to our presentation for this session, I'm going to dive into the details of that example of an investor return, sort of break down that waterfall. Because I get a lot of questions, as do our investment specialists, right? I've got several investment specialists on staff that talk to folks like yourself and answer questions and discuss these details. But it is important to sort of break this down. So hypothetically, using a $10 million investor capital on hand, right? We've got more than that now, but this is a nice even round number to be able to show you. And this is actually real numbers, okay? And I say that because when I back into this example, right, it's going to roll up to the investor, that's you, earning 9% annual. So using $10 million investor capital on hand, here's how it works. First, the fund is earning around 15% annual gross income. So 15% of your $10 million on hand across many, many investors would be a return in dollars of $1.5 million. We, of course, then have to pay out our third-party operational expenses. So think banking fees, loan servicing fees, CPA advice, legal costs, so on and so forth. Those third-party non-Marshall Reddick, approximately 1%, okay? Which based on the 10 million, again, is 100,000. Then next we pay out that asset management fee. That asset management fee is paid out monthly, and it's a 2% annual number. So basically 2% divided by 12 months in a year. And so annualized based on 10 million, we're talking about a $200,000 management fee paid to Marshall Reddick. Then we get into the preferred return, right? So the preferred return, again, 6%, which based on the 10 million is 600,000. Once we have passed the preferred return hurdle, now we have are into the profit sharing element. Again, that's a 50-50 profit share. So in this scenario with 15 minus 1 for the third-party expenses, minus 2 more for the management fee, minus 6 for the preferred return, leaves 6% net profit remaining to be distributed 50-50. That means 3% or 300,000 more to the investors, 3% left over to Marshall Reddick. Okay, so when the fund earns 15% annual gross income, again, which is 1,500,000, and when the third-party expenses total 1%, which is 100,000, the investors, again, you, earn 900,000 of that 1,500,000, and Marshall Reddick earns a total of 500,000. So very easy to understand in terms of numbers and percentages. And for you specifically, if you're one of those average investors coming in, right, again, the minimum's 25,000, but most folks are coming in someplace between 75 and 150,000. If we use a round even number of 100,000 and these numbers, again, real numbers that are happening right now and since inception, you'd be earning 9,000 per year, which is 2,250 per quarter. So I hope that's clear. But again, if you have more questions in that regard, and I'm sure you might, we look forward to speaking with you, either myself or an investment specialist. Now, there are 5 steps to invest. Very simply breaking those down. Number 1, speak to a fund specialist. We talked about that. Go through the website, read the paperwork if you're so inclined, right? Formulate your questions and schedule time to speak with either myself or one of our fund specialists. Step 2, get through accreditation. If you have questions about that, happy to answer them. Otherwise, be reaching out to your trusted third party or poke around on verifyinvestor.com. That is, unless you can qualify via income and you're comfortable showing us your W-2s or 1040s or such, we'd be happy to look at those and can verify you in just a couple of minutes. Step 3, set up your investment fund portal. We haven't talked about this much, but do know that we have a third-party software. And for those rental property investors that are out there, we use AppFolio, right? Not only for our property management, but also for our fund management. They have a fund management software. And so you will have your own unique user and password. You'll be able to log in and be able to see your contribution, your investment, as well as your distributions, as well as your signed investment paperwork. As well as that's where we will publish the quarterly statements. That's where we will publish your year-end K1. So it'll all be housed safely inside that investment fund portal. Step 4, sign paperwork. And it's very light. Really, it's that subscription agreement along with a couple of other documents which you're very familiar with. W-9, request for taxpayer identification, as well as a K1 consent to receive that paperwork electronically, AKA inside the fund portal. Lastly, you wire funds, right? You do have some other options, but they're large dollar amounts. We prefer that you wire them, but you also have the ability to mail a good old paper check, issue a bill pay if you're so inclined. So these, again, are the 5 steps to invest. Very simple, not a lengthy process. Quick overview, what we discussed. We have a 25 minimum investment, 12-month minimum hold, 6% preferred return followed by a 50% profit share. The distributions are paid quarterly, and you must be an accredited investor. Ready to get started? I know there's a lot of folks that are, and we're taking calls from those folks on a regular basis. So remember the website, and we're in the historical performance section. Remember that Invest Now button. Okay, so this is your one actionable item. If you're ready to take the next step and you want to get the conversation started, please do so. By clicking that button, an investment specialist will contact you. That might be myself, that might be one of several others who are intimately knowledgeable about the mortgage fund, who have their own investment position, just like myself. Me and the principals in this fund have heavily invested. Currently, that percentage is somewhere in the neighborhood of 90-10. So 90% of the 25 million on hand is from the investors like yourself, where the other 10% is insiders, principals like myself, or the investment specialist that I've been describing. So again, the actionable item today, click that invest now off of the website to prompt an investment specialist to reach out and get the conversation started. I certainly do appreciate your time this evening. It's always my pleasure, and I look forward to speaking with you. Thanks again from sunny California and Newport Beach. Hope everyone has a great evening, and again, look forward to speaking with you soon.